Hello students, today I will discuss about the black 5. In that black 5, first that is 14th unit, that is cost control and cost reduction. Cost control and cost reduction. What is the meaning of cost control? What is the meaning of cost reduction? Cost reduction. Let us talk about the cost control. Cost control is a technique to reduce the expenditure of the related product. So here we are going to reduce the cost. Yes. Cost control is a concerned with the way of means keeping the cost at lower level. So whenever we are going to produce any product, whenever we are going to provide the any service, generally it involves some cost. So when we produce something, we try to reduce the cost. We are going to prepare that particular product in minimum cost. So maximum we are going to try to reduce the cost. So that is called as a cost cost control. So controlling means what? Where the expenditure is identified, where is increasing very highly, and where is the expenses are increasing without relating to the manufacturer. So that situation we are trying to minimize the cost. So that is cost control. Cost control is the employment of the management devices in the performance of any necessary operations. So pre-established objective of the quality, quantity, time may be attained the lower possible outlay for goods and service. So it means it talks about the whatever we are going to produce, whatever we are going to provide services, maximum possible low cost we are going to give. So that is called as a cost control. So maintaining of budget, staying within the predetermined budget of standards, and real-time monitoring identify the addressing of deviation. So here I'll talk about the defining of the cost reduction. So cost reduction talks about, previously we talking about the cost control. Here we are talking about the cost reduction. Cost reduction is a systematically lowering the cost without compromising of quality or servicing. So we are going to produce either maybe manufacturing goods or services, lowering cost. And at the same time, we are not going to compromising quality or service. So maximum quality with minimum cost, we are going to provide. So achieving the genuine and permanent savings. So this will help to achieving the genuine and permanent savings. What is the difference between cost control and cost reduction? So here, cost control and cost reductions are two different elements. Cost control talks about the short-term focus, whereas cost reduction talks about the long-term focus. And this is maintaining of standards reactive approach. And the cost reduction is improving the standards proactive approach. So it is emphasis of present and past. Generally, cost control can be emphasis side present and past, but cost reduction is only in present and future, but not for the past. And cost control intend to set up the conservative procedure, lack of dynamic approach. Whereas cost reduction is a continuous process, searching for the alternative of all the times, innovative nature. So this is the different approach. Usually limited to items which have standards in cost control, whereas cost reduction applied to every section. So every section of the business. So cost control talks about the particular one segment and one standards. But here every business segment cost reduction is applicable. So cost control represent the effort of made by towards achieving the target goals. It is the whereas cost reduction represented the achievement of the reduction of the cost in all the efforts of reach the goals. Here targeted goal is different, achieving the all goals is different. All goals includes the entire organization goal, and targeted goal means one particular segment or particular department. In cost control, management directing how to do the things. But whereas in cost reduction, are thinking doing all the levels of management. So that is the cost reduction. And principles and prerequisite is cost control and cross procedure. So here, first principles of cost control and cost reduction. So cost control and cost reduction principles, the cost reductions are nothing more or less than the principles of sound management. The program must be used for the management cycle, and it must be based on the sound management of organization. It must be a systematic job compared with every other company activity. So these all are the principles of cost control and cost reduction. Prerequisites of cost control. So prerequisites means what? First, before discussion of prerequisites, principles and prerequisites of the cost control, there is a clear structure required, established standards required, effective communication required. So clear structure means what? Define roles and responsibilities of the cost management. In that particular segment, in particular department, what is the roles and what is the responsibilities of cost management? We have to clear structure, we have to provide. And establish the standards, realistic budget based on the accurate data of the production. So establish standards, how we are going to provide based on the realistic budget. So whatever the realistic budget is there, based on that accurate data, we are going to production. So they are going to set the standards. Effective communication. One feedback is loop for the continuous monitoring of the improvement. So effective communication is nothing but the communication between top level management to middle level management. We have to give proper communication. So that is also very important. And principles and prerequisites of cost reduction. Principles and prerequisites of cost reduction. So here, value-oriented approach is there. It is going to be focusing on the customer needs, first one, and continuous improvement of mindset of embracing innovation and employee involvement and empowerment of identity cost saving. So these all are principles and prerequisites of cost reductions. So cost control ratios and metrics. Cost control ratios, generally we have different types of ratios, that is three ratios as per our text: activity ratio, capacity ratio, efficiency ratio. Activity ratio, capacity ratio, and efficiency ratio. So activity ratio is nothing but a part of the material cost ratio. Capacity ratio, efficiency ratio, it is part of the overhead cost ratio and labor cost ratio. Now, let us talk about the activity ratio. So activity ratio means what? Activity ratio, the level of activity of our production volume refers to the volume of output manufacturing concern. So here, activity ratio, we are going to consider two variables. That is standard time worked and budget time available. So actual time, whatever we worked, that we are going to take, and allowed actual time we are going to take. So that time we will get the activity ratio. And capacity ratio. Capacity ratio talks about the constitute the fixed quantum of the plant and machinery, human resources. So one machinery, how many products, how many units will produce? One labor, how many products he can produce? And their the quantum of their quantity of their targets. That will we are going to talk. So here that capacity ratio talks about the actual time worked and budget time is available. Capacity ratio. Here, that is particularly either it may be labor, either it may be machinery. So that is called as a capacity ratio. And efficiency ratio. So and in capacity ratio, actual number of direct working hours and budgeted working hours also we are going to be considered. From that only we calculated actual time worked and budgeted available works. Efficiency ratio. Efficiency ratio talks about the standard hours of production achieved and actual number of direct working hours. So here we are going to take whatever the different actual standard hours of the production achieved, that all are we are going to take. So simply these activity ratio, capacity ratio, efficiency ratio, these three can be, we can show in the elements of cost also. That is material cost ratio, labor cost ratio, overhead cost ratio. To calculate that material cost ratio, we are going to take whatever the cost of amount we spend for the raw material which is used in the production and total revenue. What is the proportionate of the total cost of the raw material in the total revenue? So that is nothing but a material cost ratio. Labor cost ratio. Labor cost ratio talking about the total labor cost in the proportionate of total revenue. So whatever amount we spent for the labor, what is our income of the total? So that we are going to take. These three situations, these three are elements of the cost. The three are we finding the proportionate level with the total revenue of individually. So that is cost control ratios of metrics. And cost control and cost reduction management perspective. Cost management as a strategic priority. At the same time, aligning the cost initiative with the business objectives. So that is also. Cost control and cost reduction management concern. Right. So here, next one is the, cost control ratios are completed. Cost control and cost reduction management perspective. So cost management as a strategic priority for the managers are, and alignment the cost initiatives of the initiatives with business objectives. And value analysis is a powerful tool of the cost reduction. Value analysis. What is the meaning of value analysis? Value analysis talks about the systematic review of product of the serving function, identifying the systematic review of the product and service function, identifying the unnecessary cost and streamlining process, and utilizing the techniques such as a functions analysis of the cost estimation. So these all powerful tool for the cost reduction. Systematic review we required, identifying the unnecessary cost first, then utilizing the techniques such as a function of analysis cost estimation. So first we have to check, we have to ensure that review for it. Next, functions and applications of value analysis. Functions and applications of value analysis. Value analysis can be applied to various aspects of business, from product design and manufacturing to the procurement and marketing. So from starting of the product design, after manufacturing, procurement, and to sell the customer marketing also, the functions of applications of value analysis includes. It empowers companies to improve the efficiency and reduce the cost without sacrificing the quality or customer satisfaction. So that is the main functions and applications of value analysis. So in this case, simply the producers, they can produce their product with minimum cost. At the same time, they won't compromise about the quality. So in the better quality with minimized cost, they are going to provide the maximum satisfaction to the customer. So that is nothing but a functions and applications of value analysis. So this is the uh, first unit in the black 5, that is cost reduction and cost control and reduction. Next. So here the very important keywords are activity ratio, actual cost, budget, budget control, capital expenditure, cost control, efficiency ratio, inventory management, productivity, responsibility center, standard costing, value analysis, variance. These all are very important. Now, yeah, yes, in black 5, next unit is uniform costing. Uniform costing and interfirm comparison. So this is the 15th unit, uniform costing. Right. So this uniform costing means what? Uniform costing is a systematic costing which is applied to number of plants belonging to the firm or number of firms belonging to the industry with the view of standardized accounting system. Under this system, uniform uniform set of principles are followed by ascertaining the cost for the fixing of selling price. Such practice applying the uniform principles costing facilitate to the comparing the efficiency and meaning of controlling cost different undertaking. Uniform costing is different from the costing methods and techniques. The use of uniform costing system does not mean that cost different businesses will be the same. However, it means that comparison of cost different firms will be logical if they practice the uniform costing system. It is also facilitate the investigate specific costing of the problems of the industry. what is the meaning of uniform costing? So, what understanding and uniform costing meaning of the objectives. What is the meaning of uniform costing? Definition. Uniform costing refers to standardized costing practices applied across the multiple forms within an industry. So uniform costing refers to the use of the several undertakings of the same costing principles or practices. It is not a distinct or separate method of cost accounting, but is only the particular technique to apply the usually accounting method to like the process of job costing, standard cost, and budget costing and marginal costing. So the definition according to ICMA London defined as a uniform costing, they use by the several undertakings of the same costing principles and practicing. So that is called as a uniform costing. So what is the major objective of this costing? It aims to establish the common costing accounting principles among the different firms and also facilitate cost comparison, improve efficiency through the shared and knowledge, promote the industry best practice. So this is the main objective. So the purpose of uniform costing, it is aimed to establish the common cost accounting principles, facilitate to cost comparison, improve efficiency through shared knowledge and promote the industry best practice purpose. We are going to use the uniform costing. And what is the features of uniform costing? All standards charges first allocated individual department of the business. Example, composing of machine, binding, etc. These charges will be include rent, rates, lighting, heating, power, depreciation, etc. All each will be apportioned by over various departments of the base most of the equitable circumvency. All wages increased in the department are charged the department only. The charges made each department respect of the general expenses of the business cannot be identified only within any one department. These charges will be usually made on the basis of percentage of total wages department. All direct workers must be job codes, doc upon the which they will record, job upon which they engage during the day. Total departmental expenditure including wages but not material divided into total estimating working hours. So these are the major features of the uniform costing. What is the objective of uniform costing? Compare and bring uniformity of the cost production of different units of the same industry, to eliminate the unhealthy competition, to improve the production capacity levels, labor efficiency by the comparing of production cost different units with each other, to determine the common policy for all the units industry on the basis of cost data of each unit, to fix the common sales, to maintain the stability demand for the product in the market, exercising of proper control production, to extend enrich the areas of research development matters, production and sales. So these all are the objectives of cost accounting. What is the scope of unit costing? Uniform costing. Uniform costing method may be applied in single enterprises having number of branches or units each, which may be separated manufacturing unit. A number of concern is the same industry bound together through the trade association. The industries which are similarly in nature of such as a gas, electricity, various types. So this is the scope of the uniform costing. Pre-requesting request is for the effective uniform costing. First, there is a mutual relationship among the participation members. Next, level of costing system they are maintaining. And point out uniformity. So these three are the very important Prerequisites for the effective uniform costing system. That three again I'm going to explain. The industry-wide agreement, cost accounting methods crucial for the successful implementation. So standardized product classification process ensure that accurate comparable the cost of data. Commitment from the participation form essentially requires shared and vision willingness adopt the new practices. A central coordinating body is needed to oversee the implementation, resolve the disputes and provide the guidance. So these are the what is the advantages and limitations of uniform costing. So advantage of uniform costing, cost control efficiency. Uniform costing foster better cost control, leading to the greater efficiency through the shared knowledge of best practices. When you are implementing this uniform costing, we are able to control the cost and improve the efficiency and improve pricing decisions. It enhances that ability to make the informed pricing decisions based on accurate cost data and industry benchmarks. Enhanced intercomparison. Uniform costing facilitate meaningful inter-firm comparison along the companies to identify the areas of improvement. So when you compare with your competitor or when you are competitor with your other firm, you are able to know what is your position. So when you know your position, automatically you're able to identify that. Easier identification of inefficiencies. While implementing of uniform costing, you are able to identify easily in inefficiencies. So this is the advantages of the uniform costing. So, and also some more advantages are there to individual units or undertakings, to work the participating units, to trade association, to government trade bodies, consumers. So these all are benefits of the. What is the limitation of uniform costing? See, uniform costing limitations. Achieving industry-wide agreement on complexity costing method can be challenging time of consuming. So entire industry, we cannot get the agreement on complexity costing methods. So everyone individually, separately, they are going to follow that. And next one is the loss of individual firms, unique competitive advantage due to standardized practice or maybe occur. So loss of individual firms, unique competitive advantage due to the standardized practice may be occur. Significant implementation of cost, including data, collecting training, and system upgrades are involved. So these are limitations of the uniform costing. And resistance to the change of forms from accustomed their own practices can hinder the adopting of uniform costing. So these are the limitations of uniform costing. Interfirm comparison. What is the meaning of interfirm comparison and what purpose we are going to discuss the interfirm comparison. So interfirm comparison is interfirm comparison involves the comparing the financial and operational performance of the metrics across the similar firms within the industry. It simply we can tell that we are going to compare the other company data. So interfirm comparison involves comparing financial and operational performance metrics across the similar firms within the industry. What purpose we are going to compare? What is the requirement of interfirm comparison? The purpose of interfirm comparison, it aims to identify areas for the improvement and also benchmark against the industry leaders, enhance the competitiveness and improve the decision making. So when you compare with your competitor or similar firm where they are efficient or where you are efficient, you are able to know that. And also to enhance the competitiveness and improve the decision making purpose, we are going to use the uniform costing method. And prerequisite is for successful interform comparison, for successful interform interform comparison, prerequisite of successful interform comparison. The standardized data collection and reporting methods are essential to ensure accurate the meaningful comparison. First one. And confidentiality agreements are crucial to protect sensitive data and foster trust among the participants of the forms. The trust among the participants from easy vital open the sharing of the data and constructive collaboration is there. Objective of performance measures necessary to be ensure that accurate and impartial assessment of the form performance. What is the essential benefits of the interform comparison? There are two types of benefits are there. Key essential benefit. What is the essentials and benefits of the interform comparison? So first I'm going to talk about the key essentials. The relevant metrics accurate the data, consistent reporting are critical for the meaningful and interform comparison. So first purpose, that is the essential. And benefits. Interform comparison drivers increased efficiency and profitability, identifies the best practices, improve the resources allocation and enhancing strategic planning. Procedure for interform comparison. First, clearly define the objectives and scope of the interform comparison. Next, select the relevant performance metric accurately reflected the areas of focuses. Then collect standardized data from the participating firm using the consistent methods. After collecting data, analyze the interpret result, identifying the strengths and weaknesses of area of improvement. Finally, implement of strategy based on the findings of settings of realistic goals and monitoring progress. Advantages and limitations of interform comparison. Interform comparison offers competitive insights, drives performance improvements, and facilitates strategic alignments. So this is the major advantage of interform comparison. Then what is the limitation? Data comparability issue, potential for misinterpretation, and cost of data collection can be pose the challenges. So this is the limitation. So this is the brief about the uniform costing and interform comparison. Next one is the activity based costing. Next one is the activity based costing. That is the unit 16. So activity based costing, a modern approach. So what is the meaning of activity based costing? So this purpose of this activity based costing, after studying of this unit, you are able to know that explain the meaning and concept of activity based costing, describe how ABC works, a technique cost of control, identify the implications of ABC for the organizations, discuss the benefits of activity based costing. So let us start with the first one, concept of activity-based costing. Activity-based costing assigns the cost to activities, then to products based on the consumption of those activities. So that is called as a activity-based costing. The concept of activity-based costing, one of the best tool of refining the cost accounting system is activity-based costing. Activity-based costing is refines that cost system by focusing the individual activities fundamental cost. The activities is event, task, or unit work specific purpose. For example, designing the products or setting up the missions, operating of the missions. So that ABC calculate the cost individually activities. After that, assign the cost to cost objectives such as a product or services, basis of the activity needed the produce of each product or services. So that is called as a activity based costing. So activity based costing core principle is activities consumers resources consume resources and product consume activities. And here ABC system keeps in mind the following three guidelines for the refining of costing system. That is direct cost raising, indirect cost pools, cost allocation basis. A feature of ABC cost system in direct cost accounting, direct cost raising. The aiming of identify some costs or cost pools that can be reclassified direct cost instead of indirect costs. The ABC cost system do this by subdividing of existing cost pools. Cost in some new pools qualify the direct cost. The direct tracing cost improving the cost accuracy. And simplify the because of unlike indirect costs, cost pools cost allocation base do not have the defined, identified. So indirect cost pools means what? Whatever the cost we not traceable, whatever cost which we not traceable, that all are indirect costs. And next one, activity based costing versus traditional costing. So traditional costing, first I will discuss about the traditional costing. In traditional costing, what we are going to do? Simply allocation of based on the volume. Example, direct labor hours. Activity-based costing, multi-stage allocation using the cost driver reflect the resource of consumers. Like production is different, service is different, consumer cost is different, like that. ABC cost techniques for the cost control. First, identify the costly activities. Pinpoint the areas of improvement. So whatever the cost drivers are there, wherever cost we are spending, first we have to identify the cost of activities. Which area we are identifying, which is relevant the particular department activities, whether it is service department or productivity department or whatever it. Pinpoint the areas for improvement, where it is low, where a high cost is there, where we have to reduce. That all we have to identify. Second, enables better decision making regarding the product pricing or product mixing or process of improvement. So once you identify the cost, then you are able to decide the price of the product. So when you know the cost of the product, then only you are able to know the price of the product. In fixation of pricing, we are going to use this activity-based costing. And product mix. When you are producing some products, along with some other products, if you want to produce, you are able to know the efficiency. You're able to know you have to identify the cost of activities in various products. So which product is giving the more benefit with minimum cost and which product is giving the maximum cost, identify maximum cost with minimum profit. we can identify that and process the improvement. According to that, we have to take the improvement. Procedure of activity based costing step by step. First step, simply identify all the activities. So identify all the activities. After that, so identify all the activities means what? Simply aggregate of the actions activities, report of the cost activities, identify the activities centers, select the first stage of the cost activities. So identify all the organizational activities. Example, order cost, order processing, machine setup, quality inspection, shipping. Step 2, assign the cost to cost pools. Accumulate that cost for each activity into cost pool. So all costs relating to the order processing. So here nothing but a cost to cost pools means whatever the cost we identified, that relevant pools we have to allocate. So that is activity into cost pools. Next, identify the cost drivers. Identify the cost drivers means what? Here, determine the factors that are drivers the cost each activity. Example, number of orders for the ordering processing, number of setups for the number of machine setup, number of inspection for the quality of inspection. So these all are we are going to take. Calculate the activity rates, divide into total cost of the each cost pool. So individually activity cost rates will get. Assign the cost rates of the products. So relevant product multiple activities rate by the quantity of the cost of drivers consumed by the each product. So that is the procedure of activity based costing step by step. Next one. Example of ABC in action. So generally, this is the example of activity based costing in action. First, we are going to purchase the material. Then we are going to send the assembly when we can gather and we are going to assemble that. Then we are going to testing. Then we are going to packaging. Individual cases, the cost is different. When the purchasing time, that total cost is different. Total cost by number of units we purchased. Individual purchasing cost we will get. After assembling, whatever the cost incurred in the second area, total cost divided by number of units. After testing also, we are going to calculate. Dealing with the price and quantity of changes in the activity based costing. So price changes, quantity changes, both are different. Price changes update the cost drivers rates periodically. Example, quarterly, annually. It reflects the change of resource of cost. So cost driver rates periodically we are going to update. Quantity change means what? Monitor the change in the cost of driver's volume, adjust the product cost accordingly. So that is called as a quantity change. Cost reports under the ABC analysis. Activity cost report, product cost report, consumer profitability reports. See, first activity cost report means what? Activity cost report shows the cost by the activity, enabling activity based management. Product cost reports dealing breakdown of the product cost by the activity, allowing the better pricing decisions. Customer profitability report. This report analyzes the profitability of different customers based on their consumption activities. So this is the cost reports under the ABC activity. Implementing activity based on costing challenges. Data collection is very difficult and employee training also very difficult and system integration also very difficult. And initial implementation of the cost also very difficult. What is the solution for that? Invest in appropriate softwares and providing through the training, pilot implementation in specific departments, secure the management by in. So that is the solution only. So this is the story about the ABC analysis. Next one, cost audit. Right. Okay. Cost audit. What is the meaning of cost audit? Cost audit refers to the independent examination of the company's cost accounting records by the qualified professional to ensure the accuracy and compliancy. It means what? Whatever the cost records are there, it is going to examination by the one qualified person. So generally, this we are going to observe in cost and management accountant. So what is the features of key features? Cost audit involves verifying the cost of data, ensuring that adherence of cost principles and procedures under covering any disappearance of inefficiency. So that is called as a key features. And characteristics of cost audit. It is efficient audit. It is propriety audit, property, propriety audit. It is different from financial audit. It is specialized service. So these are the various characteristics of audit. So what is the objective of cost audit? Cost object generally there are few objects are I mentioned here, but according to our text, we have general objective. Second one is the social objective. General objective talks about the general examination of cost records, and whereas social objective talks about it helps to increasing the productivity different factors. It helps to identify the uneconomical product line. It helps to fixing of the price and control mechanism. So based on these general objectives and social objectives, I given that cost objective audit verification purpose, detection purpose, cost reduction purpose, compliancy purpose we are going to talk. Verification means what? Cost audit ensure that accuracy and reliability of the cost accounting records of the data. Detection means what? They identify errors and frauds and irregularities that may be impact the cost accuracy. Cost reduction means what? Cost audit helps to business reduce the cost and improve the overall efficiency. Complaincy. They ensure the compliance with the relevance of cost accounting standards regulations. What is the advantages? There is a advantages of cost audit. First one is the cost control audit. Cost control advantages. It is advantages to the management. It is advantages to the cost accountant. It is advantages to shareholders. It is advantages to the government. This is advantage also society. And this cost control, we can control the cost and profitability. When you control the cost, automatically your profit will be increasing. It may be help to enhancing the profitability, optimizing of the cost reduction and decision making. Cost audits provide the reliability data, inform that decision making regarding the pricing resources. Next one is the competitiveness. When you want to give the competitiveness for your competitor, this will be help. Next, what is the difference between cost audit and financial audit? Cost audit focus on the cost accounting only, while financial audits focus on the examination of financial statements. In cost audit, we are going to we are going to record, we are going to check, we are going to examine only cost records only. Whereas financial accounting, we are going to examination all the financial records, that is financial statements. The major objective of this cost audit and financial audit. Cost audit aim to verify the cost accuracy, while financial audit ensure that fair presentation of the financial position. So this is the major objective of these two. And legal requirement. Both can be statutory, but differed based on the specific regulations of industry requirement. Cost audit program and procedure. So cost audit program and procedure means first we require planning, then we require preliminary review, then detailed examination, then analysis, then reporting. So here, procedure for that planning. So what is the planning? The audit is carefully planned and defining scope and objective of timelines. So what period it is going to be covered? What element it is going to be covered? So what is the factors we are going to consider? That all we are going to take. Preliminary review. Preliminary review means the auditor gain understanding of the company cost, accounting system and procedure. This detailed examination through the review of cost records data conducted identified the discrepancy. This analysis, auditor analyze the data uncovered inefficiencies, identify the areas of improvement and calculate the cost variances. So this all analysis they will do and interpretation also it is going to give. After preparation of analysis part, he is going to reporting. That reporting includes findings and recommendations of oral assessment of the company. Company's cost management practices are documented. Aspect of cost audit. In cost audit, what aspects we are going to be covered? Generally, we are going to cover all the cost of elements and cost of methods. Cost of elements is nothing but a material, labor, overheads, and costing methods is evaluate the effective techniques and methods. So when you are going to talk about the material cost, the audit examines the procurement and storage and uses of the material. Ensure that efficiency inventory management. So it means what? How much material they purchased? What is the material is there in the work in progress? What is material is there in closing stock? How much it is stored? And how it is effectively utilizing that proper material. So that aspect we are going to check it. And labor. Labor cost, the auditor reviews about the attendance of the laborers, the payments of the wages, and productivity to optimize and labor utilization. So these aspects they are going to cover. And overheads. Overheads are scrutinized to the ensure accurate allocation, appropriate. Overheads talks about the overheads are scrutinized to ensure that accurate allocation or allocation is there or not. And also apportionment of the overheads and absorption of the overheads properly allocated or absorbed or apportioned or not, the cost auditor will be looking about it. So after these three aspects, he is going to check the costing methods and techniques whether properly utilized or not. That all are is going to talk. And cost audit report. Cost audit report generally we classified into three categories. That is scope and findings and recommendation. Scope what we talking about, the report clearly outlines scope, audit and specifies areas are examined. Findings, detailed observation and key findings from the audit presented including the discrepancies and inefficiencies discovered. Recommendations. The report provide the practical recommendation. The report the reports provide the practical recommendations to the address the identification issue, the improvement of cost. Chandadhar sir. Hello. Hello, sir. Cost audit reports. So these are the cost audit reports. Cost audit in India. So cost audit in India, it is a legal framework as per Companies Act, other regulated bodies such as MCA and ICAI, legal framework of cost audit. The certain industries cost audit is compulsory. And recent developments, amendments, cost audit is regulation to enhance the transparency disciplines. So this is the story about the cost audit.